welcome to today's episode of the Property Pod. My name's Libby, and today I'm joined by Gavin and Samantha from Scrutton Bland. Welcome to the podcast. Thanks for coming on.
Thank you.
Hello.
And we're going to speak about transferring a property into a business and sort of the basics of that. So welcome to the podcast. So tell me a bit about Scrutton Bland.
So Scrutton Bland is a tax advisory and accounting practice based in East Anglia. We have offices across Ipswich, Colchester, Cambridge and Diss. And we've got a particular specialism in advising on tax issues within the property sector.
Okay, great. And what is meant by transferring a property into a business?
Well, transferring a property into a business can mean transferring it into a partnership or a limited company, and we're going to focus on the latter today. A limited company has got a separate legal personality, so putting a property into a limited company is essentially giving it a new owner that is subject to different tax rules, and that can, generate a lot of savings for property owners.
Okay, great. And do you have to own a business first to be able to do this?
No, you can just anybody can set up a limited company, but obviously you would only set it up if you intended to have assets transferred into it or operate a business.
Okay, great. And what are the benefits of transferring property into a business?
Well, the main benefit is the fact that companies are subject to a low rate of tax. So corporation tax rates at the moment are 19%, whereas individuals will pay income tax at either 20 or 40 or 45%. So that's the main saving. Also, the properties will be transferred into the company at whatever they're worth on the date of transfer, their market value. And that means that the company will owe the individual payment for those properties, which creates a pool of money in the company that then can be extracted tax-free. There's other advantages as well. Individual landlords don't get full tax relief on their mortgage interest payments, whereas companies do. So that can generate further savings.
Okay, great. And are there any disadvantages to the process?
The main disadvantages are, the main sort of cost of incorporating are twofold: capital gains tax potentially, and also stamp duty land tax. If you have a property that has increased in value substantially since you bought it, you might have bought it for £200,000 and it's now worth £500,000. By transferring it to the limited company, that will generate a tax bill on the gain. So in that case, there would be tax payable by the individual on that £300,000 profit.
Mm-hmm. And what are the disadvantages?
Well, the main costs of incorporating a property or a number of properties are twofold. There's a potential capital gains tax cost, and also there'll be a stamp duty land tax cost. If you bought a property for, let's say, £200,000, and at the date you transfer it into the company, it's worth £500,000, for example, the individual who is transferring the property will have to pay capital gains tax on that increase of £300,000, and that can be quite expensive.
So there's also a cost for the company in acquiring that property, because the company will pay stamp duty land tax, and where you transfer property to a company, the assessable consideration is the market value of the properties. And with stamp duty rates ranging from 3% all the way up to 15% for property investors, this could result in quite a significant cost. Mm-hmm. However, there are reliefs that can be claimed, such as multiple dwellings relief, which can significantly reduce this cost. Or alternatively, if you have rental flats that also are within a building which has a commercial property, then it's possible that non-residential rates can be paid. Or similarly, if you're transferring at least 6 flats in one transaction, you can claim non-residential treatment, which results in a lower rate.
Okay, great.
We should probably also mention there are additional sort of admin costs of running a company, and we would usually estimate those at around about sort of £1,000 to £1,500 a year.
And I think, just to add as well, I think given the rapidly increasing mortgage rates at the moment, that's something to bear in mind as well, because many individuals will have existing mortgage deals that they will not want to disturb. And so transferring property into a company could result in having to refinance those deals and maybe not securing as good a interest rate as they may have currently. It all depends on how far they are into their existing mortgage deal. Having said that, with increased mortgage rates, there's a greater focus upon making sure you get tax relief for the interest that's paid. So it's a case of really looking at each case very specifically, because what might be the best result for one might not be the best result for another.
Okay. And is there a recommended number of properties that you should own before transferring property into a business?
No, I mean, there's no hard and fast rule. I mean, as Gavin was just saying, you have to look at it on a case-by-case basis, and it really is just a case of crunching the numbers. It might be the case that you own just one property that you've purchased quite recently that's generating a large amount of rental income, and it could make, there could be substantial savings on transferring just one property. It could be that you own 50 properties and the mortgage interest rates are going up and you want to maximise the relief. Or it could be that some of those are standing at a very big capital gain that we talked about earlier. And so it might make sense to leave some of them outside of the company. It really has to be looked at on a case-by-case basis.
Okay. And do you need an accountant to undertake your bookkeeping and accountancy once your property is owned as a business?
Obviously, we'd like to say yes, because
Yeah.
but the honest answer is not necessarily. It depends how complex it is, and it depends how confident the individual is in dealing with their affairs. I think it's fair to say that most landlords do appoint a professional advisor, though.
Okay. And how can Scrutton Bland help people to transfer their properties into a business?
I think firstly, we'd be looking at making sure people are fully advised on the tax consequences of shifting property into a company, because the cost of doing that is a really fundamental point before you can actually make that decision that you want to transfer the properties, or whether that is the right thing for an individual to do. Once that decision has been made, we can then liaise with the solicitor involved, just so that we can provide input as needed during the process.
Mm-hmm. And do businesses still have to pay stamp duty?
Yes, so as I mentioned earlier, a company acquiring property will generally pay stamp duty, land tax on acquisition, which has to be paid within 14 days of completion of the acquisition. So that's definitely something that has to be thought of in advance, so that there's enough time to budget for that, and also to make sure that any reliefs that are available are claimed.
Mm-hmm. And what happens to the profits from rent received or from selling a property?
So once the property is in the company, any rental income that comes in, or if they sell the property, any profits from the sale will sit in the company. The company will pay tax on those profits, and whatever's left is then available for the shareholder of the company to take out. Now, there's several different ways they can take the money out, either as loan repayments in relation to the original transfer, as interest payments on that loan, as salary, or as dividends. And we would look at the individual's particular circumstances, what other income they have, to come up with some remuneration planning to work out the best, the most efficient way for them to get the money out. Or if they don't need the money, they can leave the money in the company to just build up over time and take it out at a later date.
Mm-hmm. Okay, great. Well, that's great. Thanks so much for coming onto the podcast. You guys have been really great. And for all you guys at home, if you did enjoy this episode, please don't forget to like, share and subscribe, and we'll see you next week.